Hello, 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 everyone. How is everyone doing? Well, that escalated quickly. Decent sell off today, testing some key levels. Russell breaking some key levels. So, this is going to now turn into an interesting week. How is everyone doing? Good afternoon, Patrick. Good afternoon, Jacob. Good evening, Anissa. AB Tesla made a comeback. It's only a matter of time. It's only a matter of time. We'll wait for Bob to get on, see if some more people join. I see some people still hiding in the background there. Uh, if you are hiding, don't be afraid of saying hi. You know, we do not bite here. We welcome people all the time. We already saw that there wasn't much going on today. Tomorrow, we got mortgage applications, non-farm productivity, EIA numbers, important for crude traders, and consumer credit change. So rather boring there. But lots of red mega caps got hit today. Energy got hit today again. So that was pretty key. Only thing that was positive from a sector perspective were utilities and consumer communication services and technology and energy leading the route lower. Fed watch 77% for that 50 basis points, so slight pullback, but hovering between the 75 and 80 area. Fear and greed still clinging on to greed mode. When I last checked, while I was setting up the live stream, Dave and Buster's hadn't reported yet. That's all I was looking at. Tomorrow morning, the key thing I'm looking at, just from a market perspective and inflation and consumer perspective from core goods, is Campbell's, if they have anything to say. So, very light morning tomorrow on earnings from anything market moving, and we don't have much on the radar screen from market moving levels. You know what? With that, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, come back and leave some comments like you did the other day. And now, the man you've been waiting for, the one and only, Bob Iacchino. Once I hit the right button, there I got the magic Bob button.
I'm starting to understand when you're stalling. There's a lot of compliments when you're stalling.
I was not
Trying to hit the
stalling.
right button.
I was actually, just searching for the right words.
Fair enough. I
So,
don't know if you guys can tell. I'm under the weather. I'm sneezing. I can't stop my nose from running. So I'll answer the first question before it's asked. Yes, I'm still long the S&P, Coco. If he's even here,
he's not here yet, but
it's
we'll
still
be
up
sure
around.
to reiterate.
Relay that it's still up around 9%. The overall position. There's no reason to just exit it because a couple of days went lower. 4 days in a row. First time that's happened since the beginning of November. Um, I don't have a terrible amount of extra input today. I would say that the yields falling to me felt a little bit like flight to safety today because the dollar was stronger and yields just kept falling during the day. And the only real risk asset that was positive was gold. And it wasn't much, but it was positive. So yen was down 0.3%, pound down almost 0.4%, euro down 0.25%, so dollar stronger overall. So it had a feel of, again, this is just today. I mean, I guess you could extrapolate it over the last 3 or 4 days. It has a feel of the economic slowdown narrative, the recession narrative finally taking hold, and maybe hitting equities a little bit and hitting yields and hitting all of that at the same time while gold holds in and the dollar holds in. So that's all I have to add in excess. And also the crude oil continued sell off is that's the same thing. I mean, it's economic slowdown. The U.S. just reached their highest levels of exports of crude and petroleum products in history. To Patrick's question, by the way, If you want to put up Patrick's question, it's kind of where I'm going. Um, U.S. crude oil exports hit their highest level. Crude and petroleum products hit their highest level ever. Exports, 11.7 million barrels, and 7.1 million barrels of pure crude oil exports, also an all-time record. And that kind of addresses Patrick's question. Xi Jinping going to speak to Saudi Arabia. Any thoughts on what's happening? My guess is they're talking about direct crude oil sales, possibly off the petrodollar. That's likely what that conversation is. So, but since maybe Xi Jinping has decided he's going to come to the table and not buy as much Russian crude oil, he's already said, well, I shouldn't say he, it's already been reported as much that they're buying much less Russian crude than they were at the beginning of the conflict. So they may be coming around to the side of the West on this particular issue. That's likely what they're discussing is direct sales from Saudi Arabia to either A, replace Russian barrels, or B, get off the petrodollar with those sales. So one of those two things is my guess.
Oh, there we go. I got to say a quick hi to George. Yeah, I thought it was a rotation. Some of the minor strength in like the 10-year and other things were a rotation into safety today.
Yeah.
We had like the S&P. This is, I mean, it's the futures technically aren't closed yet, but this is headed to be the lowest close since CPI Thursday. So on a
Today was the lowest low in crude oil, Mike, since December 27th of last year. Lowest low, not lowest close, but lowest low since December 27th of last year. So it's a pretty big move.
In crude, you said?
Actually, it would be the lowest close as well, wouldn't it?
In crude, I mean, this
lowest
is
close since probably 22nd of December.
Yeah, this is the lowest close since the end of December last year. I'd have to look exactly, but it looks like since December 21st.
22nd? 21st?
21st or 22nd.
Yeah, lowest low since December 26th or 7th, I think.
So yeah, we've round tripped it back to there. We have a major support cluster for anybody trading crude now at 71. Major support cluster, and then the second target on the double is 69.83. Oh, so will it continue to play out with the long-term signal? George.
Jesus, George, is that a real question? Can I just burn it, George? Do I have to put it with one of those two?
Quick question for both. What is this? If you couldn't touch your accounts and had to pick between one of these two to manage your portfolio, who would you choose? Kathy Wood or Jordan Belfort? Shoot me now?
At least I know Jordan Belfort wouldn't lose it. He would spend it.
Well, that's just a ridiculous question.
Yeah. What's option B, George?
Can we have like somebody who at least has a fighting chance? I mean, that's just a horrible question.
Yeah, horrible question.
I wouldn't give Coco's money to either of those two.
I would give it to Kathy Wood because she just buys. I'd give Coco's money to Kathy Wood. What is there any more questions for me or Mike? Do you have any? Because I really do feel like crap.
No. I mean,
pretty quiet day, honestly, despite the sell-off, wouldn't you think? I mean, I would overall classify this as a quiet day, despite crude oil being down 3 1/3% and the equities dropping for a fourth day in a row. It seemed quiet.
There were some rumors flying around about I didn't get the specific name, but some fund potentially doing some liquidations today. It was also this morning, once we got the selling coming in, it erased J. Powell Wednesday. So everything that bought, all the short-term traders who bought J. Powell Wednesday on the break higher,
the Cocos?
All the Cocos, yes. This just accelerated the down move. I didn't check at the end the final volume, but it was a little uptick, especially from yesterday's volume. but the sell-off volume is still much lower than the buy day volume. So
Yeah.
we definitely don't
It's
have a.
interesting.
Go ahead.
Go ahead.
We definitely don't have a capitulation down volume, like where people are just running for the exits from a volume perspective yet. But we have this key. I'll just get your thoughts on this, and then we'll let you go so you can feel better. We have the Cree breakout, from the highs in end of October that were broken on CPI Thursday. And right at that level, we have the 50 exponential. So we came down real close to it today. So if that breaks, it could get really starting interesting going into year end. I'm not saying it's a sell off all the way through year end, but it could lead to a more substantial pullback.
Yeah, look, if there was put up the weekly ES, for example, and you can kind of see that um, if you tighten that up, Mike, and you go back to the all-time high in November of last year, this is very much lower highs and lower lows. That's really what's happening here. And, people keep saying, oh, if we get here, the bear market's over. If we get here, the bear market's over. Other than the rotation higher that happened um, the first couple of weeks of August, when it rotated higher than that high on May 31st, basically where your arrow is, Mike. Other than that rotation, it's just been lower lows and lower highs. And you might even call that one that happened in May just kind of a head fake, just kind of a quick 1 or 2 week thing. But this is playing out like a classic bear market. So it's not looking any different to me right now, which is why I have such high standards for it to turn away from being a bear market and turn into a new bull market. I have very high standard for that. We're nowhere near that, in my opinion. I don't know how to work this Discord.
Real
I'd like
quick.
to see your Discord, Mike, but I don't know. I'd like to see your Discord on FTX, but I have no idea how to look at this stuff.
Here, it's under. I
Discord's
posted
so
it under
confusing.
articles. It was an interesting little video. I'll text it to you. I
There's articles. I still don't understand the Discord. There we go. Go back to where you once belonged. Got it.
Yeah, it
All right.
was. I
I've
thought it
tried
was
to
a really
engage in
good.
Discord. There's so many pages and channels. I don't know where to go.
Well, you're. I mean, you're not quite a boomer, but you know.
Yeah, I mean, Jesus.
Uh,
There's like I look at this and how many hashtags are in this Discord? Oh, there's a questions for Bob one. I should probably go there. But they're all from Minky. Who's Minky?
I
Well,
think.
there's only two. Oh, here we go. Here's more. These are questions for Bob. I think you were supposed to ask me, Mike. I don't
Yeah,
know.
I know. I forget to check it sometimes because.
All right.
By the
So
way,
for everyone that's here and for everyone that's going to join, I'll start looking at the questions for Bob.
all right, there you
This
have
way,
it.
this way when I feel sick, I'll just come in and go look. There's 4 or 5 questions in Discord I'd like to address.
Mike, about the 210 yield curve, is it when the Fed's cuts rate that causes the yields to move up? It
Not
can,
necessarily.
but not
Can, but not
necessarily.
necessarily.
Again, it's going to be the acceleration. Do you have any thoughts on the yield curve? And that's the last thing I'm going to ask you
Yeah, let me
because.
just kind of like help with that question, and because it might seem like a cop out to say not necessarily, but you got to understand what drives each side of the curve in order to understand when the yield curve might um, revert. I mean, it's inverted because people think yields are going to be higher now than they will be in the future. That means they think, and I'm just kind of like putting it all in a nutshell for you. That means they think the Fed will have no success now in fighting inflation and much success later. Right? You think about what yields are. Yields are supposed to be above inflation. That's the whole point. Why would you buy something that's going to pay you a 3% yield? I'm making that number up. If inflation is 5%, because that means you net lose 2% over that course of time. So if we have a 10-year that's at 3.5%, investors think that 10 years from now, inflation is going to be below that. Okay, so what would make it go down? Well, certainly, if inflation was going to be, let's say, at 2.5%, and the Fed's done such a good job on the front end that they need to cut rates to, down to 1.5%, then the yield curve goes back to its normal shape. And as long as inflation expectations stay there 5, 10 years out the yield curve, then the curve will be normal, right? What does that mean? It means that the short-term outlook for the economy needs to be weaker than the long-term outlook for the economy. Right now, the long-term outlook, George, is weaker than the short-term outlook. And that, in a nutshell, is what the yield curve says. So why is the normal shape of the yield curve positive or uninverted? Because generally we expect the economy to grow, not contract, just as a general rule. Part of the reason the economy is contracting slowly now and quite a bit in the future is because people are working more and producing less. Productivity's down. So if the Fed is cutting rates, it could be that we're in a massive recession or entering a massive recession and they start cutting rates. But unless inflation is tame, that doesn't necessarily mean, or I'm sorry, if inflation has been tamed and people think the recession is going to be strung out, that doesn't make the yield curve go back to its normal shape. Just think of it from a perspective of economic strength. Right now, the yield curve is saying the economy is stronger now than it will be in the future. Normal curve, the economy is going to be stronger in the future than it is now. That's the simplest way to look at it. So when you say if the Fed cuts, well, what does that mean for the future of the economy and for the present in the economy? And that's your answer. Does that make sense, George?
Well, there you go. So Stafford took the day off and went for a motorcycle ride, and Sterling's late because he had to work. Ah.
Attaboy, Stafford.
All right.
By the way, I think I caught this cold because it was freaking 68 here this morning. I was shivering.
Oh, I see you're suffering in 68. Okay. All right.
Well, it got up to 84. Don't get me wrong. That was just this morning.
Hey, Chris just wants to let you know, Bob, he'd like to say thank you for all the knowledge you have passed on.
I appreciate that, Chris. I'm happy to do it.
And George says it makes sense. I was thinking about it only in the mathematical sense.
Yeah, most of this stuff is actually very simple at its core. Predicting it is the hard part. That's why Mike relies on the charts, and that's why I rely on Mike.
Well, there's so many moving parts. I mean, how else do you can show the same stuff to 5 people and get 5 completely different opinions. So
right. And
that's why
doesn't mean those opinions are wrong.
Like, no.
I had a situation. I had a situation where I had an argument with a friend, and we were both right in the trades we took. They were different duration, and we had completely different reasons for taking the trades. My trade hit my profit and did not get stopped out, and then after that, his trade hits his profit, and we still had no resolution to who was right about the fundamentals because we both made money. So.
Well, there you go. All right. Well, you get some rest, Bob. Feel better.
Right. Oh, look at Sterling's quote. I knew they'd freaking.
What other ease proposed curbs on Chinese-made chips?
Just wimps. All right. I'm gonna go get some.
All right. Ciao.
Thanks, guys. I'm gonna be here Thursday.
All right. Thank you.
See ya.
All right. Just back to me. By the way, we had that little potential double bottom in the 10-2 yield curve. That is off the table now. So, no reversal signals besides cycles getting closer to the bottom and possibly a little divergence, but nothing else there. So, does anybody have the Dave and Buster's results? I'm just curious. For some reason, I like to follow that one. All right, we're closing in about 6 minutes on the close in the S&P. By the way, if you didn't notice it going into the closing time frame, there's a little reversal double bottom. First and second targets hit. So guess what? Oh, for overnight, if it does continue, I'll use 31.51.80 and then back to 39.55. Prior breakdown zone from a higher time frame found some little intermediate support today before the afternoon continued sell-off. A little support found with Europe, and then the resumption after the European close and after the lunch sell-off. Yes, these were momentum bars. So we had that little pause with a very neutral tick, and then a break of some key levels with momentum bars. And remember, this is one of my favorite entries for shorter-term traders. Momentum bar, pausing bar, you did not get the retrace to the 50%, and then we break. Fantastic follow when you get a 1-bar pause. A 1-bar pause, you don't get the retracement to 50%, and then you break that lower. Fantastic continuation signal. One that I love. And then you see just grinding the 5-minute rotation zone down and holding the 8 on the 15. This was very weak. Again, not anywhere near like a complete sell-off volume-wise, but technical damage is done. Now, why do I say that? Because looking like this is going to close the lowest close since CPI Thursday, November 10th. So everybody who bought the close or after the close, you're now all underwater. The next level, we didn't quite get down there, but this 39.11, 39.14 area with the 50 is key. And the bottom of this channel, we break that, that sort of will get interesting, especially now cycle's still rolling over on the top, but we could lead to some more substantial damage. More substantial damage. I want to touch on something else. The Russell closing, confirming and triggering a very sloppy double top, but I am going to utilize these key levels, especially this first one. Why is it sloppy? Because it's extended. The time frame to make the two tops is extended, and it's got the hitch in it. You can see it still here on the weekly, and you can see if we close the week below this level too, it's a nice trigger on the weekly, reversing this up move. Is it to new Russell lows? No, it's not, but it would do some substantial market damage. So on any rally now, 1823 to about 1832 is key resistance. Now we've shifted from key support to key resistance on the S. Just wanted to get that out of the way because the S&P is not doing as much technical damage because we're still holding above the 50 in the major breakout zone, but we're really close to it. Overnight, you got 39.55, and if something bigger snapped back, we also see we didn't get the luxury of the close below 62 on the daily because we've already hit the 87.5 just with the quick little shot down. But we'll be watching for rollover plays now on any rallies. The NASDAQ, not the lowest. I mean, it's a lower close than CPI Thursday, but the close before JPOW Wednesday is still lower than we're going to close today. And that's round trip back to the 87.5. Did not confirm, again, a sloppy double. But I will be watching for this now to trigger this week. So this is very, very key, especially, again, with also closing in, and that the weekly 200 is right there at that double trigger point, and weekly cycles rolling over. I'm wondering if we're going to get more. Does anybody remember the December sell-off going into December 24th from when was that, 2018? Is that 2018? All the years. Boy, I almost wanted to say all the years combined. Let's see. It wasn't this one. When was it? I forgot. Where was it? Could somebody remind? Oh, I wanted to go back to the S&P though. Was it the 18? Ah, 20. With the tempered, that was COVID right there. Here we go. This is the one I'm talking about. This was the one I'm talking about. The sell-off finalizing on December 24th, and then you got the quick little reversal rally. I'm wondering if we're going to, I'm not saying we are going to, but I'm wondering if we're going to get something similar to that. I am curious. Because I remember that the market got just shortened trading day on Christmas Eve, and it just closed horribly, and then the next week it went into a rip your face off Santa rally. Hey, I'm not really seeing where the Santa rally is going to come from. Year might end near the June low. It might, but I'm very cautious that last week of the year. Let me zoom back there. Let me just take the Wayback Machine. I mean, this, I remember this like it was 2018 or yesterday. I remember, because I remember that day. I remember that Christmas Eve. I was like, whoa, here we go. This. Where'd it go? Where'd I go? There we go. No. Here we go. Right here. The acceleration into the end of December, and then this was the last week. This was the last week reversal, but here was Monday the 24th. Look at that. I remember this. I was going the day before Christmas. Whoa. Then we come back on the 26th, and boom. 26, 27, 28, there was the end of the year little rally. So I'm wondering if we get an acceleration down like we did into the last week. That could get interesting. Not saying it's going to happen. Not saying there's any, they're trading similarities. That's just a curiosity of mine. Play. So that's Dave & Buster's for anybody who doesn't know the symbols PLAY. Revenue beat. Okay. Estimated earnings. Interesting. A beat by PLAY. Dave & Buster's. So, and look at that though. I wonder if they gave forward guidance. Because they just had a beat and ugly. Wow. Wow, that's going to be below the 62.5 also. Oof. That's one I'll be watching to sell some rallies now. Dow holding on a closing basis the key levels. We were below it and holding right at the rotation zone. So I'm going to be watching to see if we get just a secondary counterbalance. Now, remember, after we've done this much technical damage, because these, especially with the Russell, the S&P, I always like to gauge the strength back on the secondary reaction. Doesn't mean it has to happen tomorrow, but if it does, the secondary reaction is going to tell us a lot going into the end of December. So the Dow closing at the critical levels, but now 33,850 is key resistance. The DAX not closing on to trigger the double. Interesting enough, selling down but not confirming it on the close. The notes, again, this looked like just sort of a minor flight to safety, but holding the rotation zone and the key 113.24 level. Be interested to see if it get a little more rotation up and form a double top. That will be interesting with daily cycles at the top. So that's what I'm watching for there. Dollar index closing right at the bottom of the rotation zone. with cycles trying to turn up now. So that'll be interesting to see if this and closing below these two lows. So I'm going to keep watching to see if there's any follow-through dollar strength. The VIX finally showing some fear. Look at that. Slamming into the rotation zone and those key tops from earlier, from back at the end of November. So now we got and nearly the 50%. So now we finally have some fear coming in with the VIX back above 20. We talked about crude. Yes, we technically have another double right here. Long way off. I'm more focused on now this 71 mark, though. And Bob talked about it. This was the lowest close since December of last year, and the lowest lows. So keep that in mind. Gold, little pause here, right at the rotation zone. This year, the 26th also falls on a Monday. Well, we had the 24th on a Monday from 18. Now the 26th falls on a Monday, but the markets are closed. The markets are closed on the 26th because Christmas is on a Sunday. So the observance day is the Monday, so there will not be trading on that Monday. Trading will resume on the Tuesday. So that will be interesting. All right. Am I using the aggressive or conservative tops on the RTY daily double top? If you're doing the RTY, please use at this point. Oh, hold on. You want the yeah, then they backed off that, though. Remember, they also backed off that a bit and said they could look for lowers in the 60s. So we'll see. On this one, given year end, I'd be using the conservative on the Russell, and with the bigger contract Russell, I still have it on the aggressive. I should shift it to the conservative because that brings this second target right to these lows before this hitch. So I have now shifted that. So and the first target, if you look here, lines up with the 50% harmonic. Let me clean this up just a hair. So that's where we sit. So that will be interesting. The first target lines up and makes a harmonic cluster. So 1778. 1778 is the first target I'll be using. So will I, Charles. So will I. By the way, your mega caps, if we go back to the heat map. Where's my heat map? Where's my heat map? There we go. Mega caps. Apple did a lot of technical damage done in Apple. Some pretty deep. Remember how yesterday, was it yesterday or the day before, technical damage wasn't major in Microsoft. This created a lot more technical damage. Amazon taking in the short. So let's just take a look at a couple of these mega caps, and then we're calling it a day. Calling it a day. So Apple, you see, not breaking, though, the lows set right before JPOW, but that's what I am focused on with this. With that key move down, Microsoft still closing above the daily rotation zone, but this is a pretty substantial line in the sand after triggering this double. It's not anywhere near the stop level, but this would be more so with aggressive stop I talked about the other day, because now we've broken this little support zone. We've tested the 50 and the bottom rotation zone. So you start breaking below this, it could get ugly also in Microsoft. And what else do we have? Amazon. Amazon is breaking down again. Hit the 87.5. retesting the low area from November 22nd. Okay, so right before Thanksgiving, the little low, then we had the rally back. Now, yes, that is a horribly ugly double. Long way out from triggering. I'm more watching for the breakdown pattern. But it is valid, so we'd be keeping an eye on that longer term if these lows hold. I'm not expecting them to hold, but we shall see. So it could get real interesting with Amazon in the next couple days. I don't understand the refill of the SPR. Why did they pick that number, and are they trying to buy above it or below it? Well, now they're trying to buy below it, it looks like. But who knows what they're going to do? Who knows what this administration is going to do? With JWN CEO saying all cohorts, especially lower and earnings getting strained, I think you're right on EXPR getting hammered on earnings on Thursday. I think we're going to see, and boy, next year is going to be a doozy, I think. Next year is setting up for a doozy of a year. Well, you're forgiven, Coco. The World Cup is obviously more important. It's not like this live stream happens every day and the World Cup only once every 4 years. So, with that, I'm going to have a little shorter session today. And keep in mind these key support levels for a bigger breakdown play. There's, again, not much coming out tomorrow. Not much coming out at all. So it's pretty much going to be the market relying on anything that happens intraday, or, the follow through. PPI is still on Friday, CPI next Tuesday, rate decision on Wednesday, and a massive OpEx on Friday. So do we get a little bounce going into PPI or not? That's going to be the question. We will find out tomorrow. With that, I shall talk to everyone later. Thank you for tuning in. Bye for now.